welcome to TechTO Quick Takes. It's Thursday, February 18th, 2021, and today we'll be talking about, are we at peak Shopify? Di in Durham out of Toronto raises $500 million, and YC darling Convictional partners with Lightspeed. We'll also be reacting to your questions and your comments, so show us some emoji love and drop a comment, and we're going to shout it out live. Let's get started. Alex, come on up. Are you ready to go? You got to unmute your mic if you want to be ready to go. That's the number one live stream.
I don't know what a mic is. What are you, this newfound technology? There you go.
Okay, so first up, are we at peak Shopify? I want to know. They just released their Q4 results this week, and they were great, weren't they?
Well, if you look at Q4, it's pretty great results. Everything's up by like 100%. You're a huge, massive company. Revenues are at what? Basically $1 billion a quarter. They had $41 billion of merchandise go through their merchants. Operating net income's $200 million, which is up almost like eightfold. Net profit was $124 million. So everything looks great. They have 1.75 million merchants globally, which is up 64%, and they're hiring 2,000 engineers. So I think they're going to try to have be able to basically fill the Air Canada Center with engineers soon.
Yeah, I mean, still a ways away from the Air Canada Center if they ever bring them together.
2,000 new engineers, right? I don't know how many they have, right?
Okay, so what makes you think we're at peak besides being able to fill the Air Canada Center?
So there's two obvious issues. One is the law of large numbers, and the second is these things called COVID and vaccines. So I think the law of large numbers is something that's so intuitive when you hear about it. It makes sense, and it doesn't always end up being true, because you could have said this about Google or Facebook. But it basically says that to continue growing like you've been growing in the past, the numbers you need are higher and higher. So right now they did $1 billion this last quarter. To be double again next Q4 next year, they have to be $2 billion. So it's possible, but it's not probable. Because you look at the numbers, and they're actually now gaining market share. So they're growing much faster in the market. So that just means it's going to be harder and harder for them to maintain this growth.
Yeah, but haven't people been saying that for the last decade about Shopify? The law of large numbers, it's getting harder to grow. How big's this market? Can they keep going?
So I think it was, how big is this market? If you listen to any podcast with Toby or read anything, in 2008, 2007, people were how many merchants are there? How many e-commerce stores? This problem's solved. Actually, Ben Evans just talked about it. Engineers would say this problem's solved. Well, what Shopify proved and what the market proved is that more and more people want to get online. If you make it easier and easier for people to get online and create stores, more and more people create stores. But I think what's changed is the market's continuing to grow fast, but they're now Shopify is growing significantly faster than the market, and faster than the market's being created. So I think they actually shipped, their vendors shipped more goods over Thanksgiving than Amazon third-party vendors. So when you start seeing them eat into the current market share, it's only so fast they can grow, because you're growing significantly faster than the market.
Okay, so what about Amazon? Are they going to stand by and just sort of watch Shopify eat into their business?
Well, what do you think?
There's no freaking way.
And I think Amazon's actually now starting to talk a lot more about Shopify, which is interesting, because if you go back to 2015, Amazon basically said, we don't need to do e-commerce stores, and they shut down Amazon web stores and sent those customers to Shopify and BigCommerce. Well, it looks like they're starting to regret that. And I think one of the most important Canadian tech news doesn't involve Canadians. It involves an Australian and an American. Late January, Amazon purchased a company called Selz, S-E-L-Z, out of Australia. They didn't make an announcement. Selz actually just the only reason we know about it is they actually just put something, a blog post up by the founder last week. And Selz is a very small Shopify competitor. They basically help merchants create their e-commerce store, among other things. So you think that this is... I can't hear you, Jason.
You think there's a lot more room to run here, or you think that Amazon's cutting it off at the pass?
Well, I think Amazon has structural problems with trying to tackle Shopify, because Shopify's purposely positioned themselves as the anti-Amazon. You don't have to show. We're not a marketplace. We're not. We're not going to bring you traffic. We're enabling you to be online, and you are a customer. But if Amazon keeps Selz separate, cross-sells them to their customers, and basically says, go do losses, I think it could cause headwinds for Shopify. It could say, if you have someone that, hey, you're a third-party merchant on Amazon, and say, hey, there's a company called Selz, we'll give you the first 2 years free and let you create a store. It could not stop Shopify, but distract Shopify and slow their growth down.
Well, look, the TechTO community is leaning in here. We are not at peak Shopify.
I would like to know more.
That's Alana Unisov. That is, I think going to be widely held belief by the TechTO community. There is a lot of Shopify news out there. Why is this news in particular important to the TechTO community?
So peak Shopify doesn't mean that we're the biggest they're going to get. It means we might be the most interesting they ever get. And again, I would personally not bet against Shopify because Toby and Harley and the management team has continuously executed and are very bold and very ambitious. I think the reason it's important is any slowdown in their growth could lead to a slowdown in their stock price. And a falling share price is not good because you've seen, let's go to past Canadian champions, BlackBerry and Nortel. The second the share price starts dropping, the Canadian ecosystem, like the general business section says, okay, this tech stuff, all overblown. We don't have to pay attention to it. I think second thing that happens is positive is you have a lot of people who have seen what growth looks like, but now their shares aren't as valuable and they don't feel as locked up and they go start other companies. So that's actually very good for the ecosystem because Shopify is showing you how to be ambitious, how to grow, and to get people unlocked. And I think the other potential negatives thing is if Shopify doesn't have the courtesy to go be as bold and acquire as much and try to take his leadership, it may not, it may hurt us as an example because I think I meet lots of founders that think very differently than 5 or 10 years ago. Part of it's just overall what entrepreneurship means, but lots of it's by Shopify saying, we're going to be the acquirer. We're going to be the number one. We're going to be bold. We're going to put Canada, we basically want to take on the world. And if they have any hiccups, it may encourage people to sell a bit earlier. So lots of potential ramifications. Jason.
I was just about to look up the current market cap for Shopify to see exactly how much value is created because you said something interesting there, which is a falling share price is going to have, it's going to be more of an incentive for some top talent from Shopify to leave Shopify and build in the ecosystem. Is this a good thing for the Canadian tech ecosystem then? Enough value has been maybe created within the Shopify rebels for them to go out now and start building their own companies. Do we want that stock price to come down a little bit? Should we welcome some more Amazon competition here?
Well, I think more founders are better for the ecosystem. It's better if people leave when they've got a great idea and they have lots of equity they can put in themselves or invest in other companies. So I don't want the Shopify prices to fall, the share price to fall. I think it's better when people leave because they're inspired, they have an idea and they have cash. But there is probably, my guess, and when you ever get to a large size like that, there's people that are, they're incentivized. They're putting their dreams on hold because it's golden handcuffs, and the risk reward of leaving is higher. The risk is higher than if the risk decreases, and it may encourage a few people to start a few more companies. That may be a net positive for the ecosystem.
Love it. Okay, well, let's stay tuned and let's see exactly how that shakes out. I think this is super interesting. We've got some people really excited about what's coming up next. Ben is looking at the ticker. He says, I can't wait for what's up next, and it's time now for us to chat about Dye & Durham. So this is pretty unbelievable. Dye & Durham is raising a $500 million round. Alex, I got to ask, who's Dye & Durham?
Well, besides having a great ticker symbol of D&D, which every time I hear, I want to go play Dungeons and Dragons. They're the Toronto tech darling you've never heard of. They're listed on TSX. They focus on cloud-based software and technology solutions for professional services, mainly legal. And they're a bit of a roll-up. They're worth $3 billion market cap. They're based in Toronto, and I'd say 98% of the people in the TechTO ecosystem probably never heard of them.
So why is that? In comparison to a Shopify or Wealthsimple, you just don't hear a lot about Dye & Durham. But I got to ask, why don't they know what's going on here?
Well, it's interesting. So first of all, one way they're huge because there's $3 billion market cap, but the revenue is not $1 billion a quarter. It's $55 million a year. So they're a bit small from a revenue perspective, but they have a big market cap. They're on TSX. And I think it goes back to just sort of culturally, how does tech ecosystem now works versus 20 years ago. Dye & Durham seems to be the way lots of Canadians made money in tech before. Let's either do a roll up like Constellation Software, who does amazing, no one talks about, or let's do a quick RTO and get on the Toronto Stock Exchange before we're huge, right? While most people that we talk to, we're emulating what happens in the Valley. Let's go build a company. Let's stay private. Let's go public, like $5 billion. It's all about the news is driven by funding rounds. And sort of when you're small-ish and serve enterprise customers or professional services, and you're not doing a bunch of funding rounds that are being led by VCs, you just don't get the attention. It doesn't seem like that fun place to work.
Yeah, I got to disagree a little bit. I think lots of people are talking about Constellation Software. I think lots of people are talking about a roll-up strategy. So I think that's becoming more and more in vogue. Before you finish that, though, you did talk a little bit around this funding round. It's a huge headline number, but let's break it down. We know the Canadian media loves so much to just put the biggest number possible up there without really understanding what's going on. So help me understand this raise. What's happening here?
It's 200 million equity and 300 million convertible debt. So I'll give, and I think Global Mail's the only one to really cover this. I'll give it a bit of credit. Like, it's not 300 million in pure debt. So usually you see 200 million equity, 300 million pure debt. It's a convert debt that can be equity. So, but it is 200 million real equity and 300 million. We'll see.
Yeah, but what does that mean? Tell us the difference between why they would raise it like this versus raising a full equity round versus not raising the convertible at all.
It's cheaper, right? The 200 million you're selling at this current price. The 300 million you're saying, hey, we'll pay you a bit of interest, but then we'll convert at a higher price. So it's basically selling future equity at a cheaper price and financing with a bit of guaranteed interest and an opt out, basically, if they don't hit their growth targets.
Okay, so it's cheap capital. That makes sense. It seems like there's tons of cheap capital today. We should definitely be talking more about all the crazy ways that people are getting access to that cash.
I know about this.
Say that again, Alex.
Are you raising $300 million soon?
Well, look, I'm not even sure I would know what to do with $300 million. Why does Durham need a $500 million round? What are they going to do with all that money?
So again, they're a roll-up strategy. So for people that don't know what a roll-up strategy says, instead of growing organically, we're going to acquire a bunch of other companies and then help them grow and take costs out. So this is their strategy. This is what Constellation has historically done. If you look at Durham, they went public last year, and since then they've done in 2020 they did 4 acquisitions, had spent $750 million. So when you're paying other companies to grow, you need cash or equity.
Got it. So they're buying companies with it. What kind of companies are these guys buying? What are they holding on to here?
Seems to be all legal, professionally service aimed companies. They all seem to be niche with moats. So and which is great, and they're much more aggressive than the old acquirers. So like one of the companies they acquired provides services for Ontario real estate lawyers, and post acquisition they went and the next day raised prices by 400%, and lawyers had nowhere else to go. So that was purely acquisitive, or I guess had a bottom and top line impact right post acquisition.
Yeah, brilliant. And how does this rank in terms of largest Canadian raises? Like, this is a huge headline number, and a lot of it is equity. How does this get them on that sort of leaderboard of big Canadian raises?
I'm not sure. You want to include life sciences in there, which we never talk about as well?
We should start talking more about life sciences. I agree.
Because life science companies all seem to be raising like 100 million, 300 million there. No one ever talks about it. My guess is this top 30. I did totally unscientific.
Yeah. Okay. I love it. That's your gut. I think it might even be higher. I mean, this is a huge raise, and I think it's an amazing vehicle they've put together, and I'm super excited for the impacts that this is going to have, not just for their business, but for the whole Canadian tech ecosystem. So I want to ask, let's make that connection. Why is this interesting for the TechTO community? Why should they know Durham, and why should they be excited about this raise?
Well, I think this goes back to how the tech community generally thinks. Once you get away from Bay Street, we look at what's going on in the Valley, and this is a place where we've been ahead of the Valley. So like if you can't pick up anything in the States right now without reading about SPACs or basically companies going public. Well, Canada has been in reverse takeovers, which is basically a SPAC, and roll-ups forever. So you have, if you look at, there's many publicly traded companies in Canada and technology that we don't talk about. There's been, historically had Constellation Software, which is doing roll-up, acquiring companies to grow. You now have also WeCommerce, who's gone public, which is Andrew Wilkinson out of Victoria. And you have I think it's Emerge Commerce, which is by Gasson, who's been basically rolling up companies for better part of 6-7 years and now has gone public. So I think this is a place where you're seeing old Canadian tech ecosystem meet the current tech trends. And we actually have a lot of expertise here. We probably won't get the headlines they do in the States, but I think there's we have the infrastructure to quickly do SPAC-like activity if that's what we want. I can't hear you, Jason.
We exported one of our top Canadians to head down to the States and sing the praises of SPACs, right?
Yeah, a small guy named Chamath.
Yeah. Very cool. Is there anything else that we wanted to talk about with Durham before we move on?
I think they're good. I think all these consolidation plays are actually good for the Canadian system because they'll naturally want to play in their backyard and acquire companies they know before Americans get them. So I think there'll be a few more exits than there would have been without these. I think the flip side is we may pay a price locally if we see cost of the software go up significantly.
Now, Alex, if you want to learn how to do a monster raise of your own, you should really be hanging out at what?
Founder and funding.
I think it should be founder and funding. Do we have one of these slides ready? How about this one? Boom.
Very good. Yeah. When is that? That's tomorrow.
Tell us a little bit about it.
Well, again, as I said last week, we talked about Stephanie and Michelle a bit over the last. Stephanie was one of our quick takes a couple of weeks ago. We're going to talk about the journey here. Michelle is a local VC who was originally at Mars and now at Stand Up Ventures, investing in women-led companies. And Stephanie is one of those companies that are doing really well. And we're going to go into the whole story tomorrow on Founders and Funding. Yeah, you're muted again.
Is that actually February 19th that it's supposed to be happening?
Isn't that tomorrow? Yes, it's because February 15th is in the past.
Okay. Wow. Great analysis happening here in real time. TechTO quick takes. Very cool. All right, so let's move on to our last topic of today. This is pretty exciting. It's YC Darling Convictional partnering with Lightspeed. So let's start with the basics. Who is Convictional and who is Lightspeed?
Well, I'll start with Convictional because I think most people know Lightspeed. Convictional, Waterloo's based company. They went to YC. They were the darling of that YC batch. They went back to Waterloo. They were got investment from Tribe Capital, who we actually had on a couple of weeks ago, and Garage Capital, which is a Waterloo-based VC fund. They provide plumbing for commerce. They basically help sell, potential brand, manufacturers or brands or people that sell to retailers, basically distribute their product and inventory via any means possible. So if you look back, there's these things called EDI, which, Jason, I don't think you knew what it was. It's electronic data interchange. So if you're a company that's 40 years old, that's how you got inventory information to your retailers.
Sorry, Alex, that I don't know how to fax and how to do carrier pigeon or whatever it is that you do.
What Convictional lets people do is just basically plugs into their inventory and allows them to distribute it to their customers to do transactions in any way possible. So it makes it very easy. So very cool. It basically modernizes lots of companies' ability to communicate to all their customers. A shot at Lightspeed, I think you can take Lightspeed.
Yeah, Lightspeed is a killer in the Canadian tech scene, doing unbelievable things in the payment space. But I got to ask, Alex, are we becoming a one-dimensional ecosystem? It's a lot of retail happening right now and a lot of e-commerce.
Well, it's a lot of commerce. I don't know if it's a lot of retail. Like Lightspeed's powering commerce, Convictional is the back end. I can think of other ones, Commerce Bear, a bunch of ad tech around commerce. I think we're building a density net. I don't think we're becoming one shot. We've got quantum, we've got AI supposedly. But I think it's good to start building some spikes where talent wants to go. If you want to be in commerce right now, there's no better place to be than Canada.
That's pretty high praise. As commerce is hot, hot, hot. Okay, so now I need to know about this deal. So we've got a YC Darling Convictional getting rid of the EDI for me. I don't need to fax anymore. I can just get my retail done. They're partnering with Lightspeed. Tell me more about this deal.
So what they're doing is they're powering Lightspeed's supplier network. So before, if you use Lightspeed's POS or technology, you could share information back and forth, see what inventory your supplier had, but you may not be able to transact. So it's basically now allowing Lightspeed's retailers to buy right from suppliers in the product. So that, why this is interesting is it actually removes friction for everyone. And when you remove friction, more transactions happen. And then for the flip side is the Convictional now has a very big customer that's embedding them in their product. So it's a win-win for everyone, the customers, the suppliers, Lightspeed, and Convictional.
That's awesome. So you're excited about this deal.
Yeah, I think it's one that most people probably didn't even notice. It didn't get any press, but I think it's huge because I think it shows, again, like you said, we're building a concentration in commerce-related startups, but it also shows how Lightspeed is sort of one of those companies that gets underestimated. It's out of Montreal. People think of it as a restaurant POS, and that's a competitive space, but it's just like, I'll go back to Shopify. Just like Shopify, keeps on finding ways to grow, keeps on finding ways to improve their product, and keeps on finding ways to make more value for the customers. So, and I love that they partner with a local Canadian company. Convictional, who is a darling out of YC, is now proving they have the chops to deal with huge companies, so that they'll help. And I think, again, we're talking about secondary effects here. You're seeing two companies to continue to grow in commerce. One is public, so Canadian public investors should hopefully continue to see the rise of Lightspeed. Will give more desire to invest in tech. And then one's a private company, right? Still, I assume, a long time for going public. And the more success and more growth we have, the more angels and more non-Canadian capital come into the ecosystem. So I think this is building and further building the Canadian reputation as a commerce tech leader. It's getting two other players that are doing well, which will just more talent and more capital for the ecosystem.
Why doesn't Lightspeed just buy Convictional in this case? Why partner? Why not acquire?
I can guess. I have no insights here. My guess is Lightspeed. I don't know what Lightspeed's trading at as valuation, but I bet you Convictional is at a higher multiple, can raise a higher multiple, so that it'd be so they don't have the currency to buy them cheaply. And I think there might be an argument here that you would destroy value by buying Convictional. So if it's a strategic acquisition to take it out of the market, that's fine. Or if it would be an acquisition to open up another business line, maybe. But I think the strategic rationale is probably not high. And I think it's the valuation, the currency would be a problem too, because you need to be able to justify the price to one side, and I think it'd be hard on both sides.
Now, we've described Convictional here as a YC darling. Tell me, what does it mean to be a YC darling? And maybe that plays into part of this in the price as well, right?
Oh, so I guess YC is 200 companies a batch now. And look, if you go back 6 years ago, YC was like 20, 30 companies a batch. Every company was well sought after, we have to invest in. But now you have a triage, and it's one of the dirty dark secrets of YC now. Because it used to be, when you get in, you're going to get a nice boost in valuation. But now it's like the top 10%, the 90th percent on above, everyone wants to invest in, gets crazy valuations. Then you get the next 40th percentile, does okay. Then the 50, then 0 to 50th percentile, you're probably getting a small boost, but it's harder to raise. What I remember of Convictional was I think they were, out of that batch of 200, probably the top 10 most desired companies to invest in. And I was getting calls from US VCs saying, "Hey, what have you heard about these guys? We're looking at investing in." It was and these were all tier 1 VCs. So it's quite, so I don't know what the last round was done. I don't know if they've raised money since, but my guess is they've got lofty valuations, which they will hopefully surpass and grow beyond. But it's for a publicly traded company that doesn't have, may not have had as high valuation to earnings, it'd be hard to swallow.
Amazing. And last up, Alex, just got to ask, if you're part of the TechTO community, why are you excited about Convictional and Lightspeed and the future of this partnership?
Well, as I said, it just helps further our reputation in commerce. And I think I just love seeing Canadian companies work with each other and help grow, to take advantage of each other, build more strategic, basically bigger moats for each of those companies.
I love it. Let's get more Canadian partnerships going. I think that's super exciting. We spoke last week about the Shopify partnership with Instagram. That's cool too, but we love a homegrown Canada partnership, right?
Yeah, and especially when it's not in the same city.
It's like is it a Montreal Waterloo, right?
Montreal Waterloo. The good thing is both of them hate Toronto, so
amazing. Okay, and hey, we're talking a lot about commerce, a lot about retail. Check this out, Alex. What's going on here?
Yeah, someone CMO of Rare Beauty. She's is that next week? Shit, this year's flying by. She's part of marketing. We're doing a marketing deep dive. She's going to talk about how to use how basically brands and what they're doing online right now.
And why should we be excited about Rare Beauty? I know you're super excited about Rare Beauty, Alex. Tell us more about it.
I use the product. You're probably better here. I don't know much about them. I know they're one of the darlings in the makeup space.
Yes, this is, I believe it's Selena Gomez's makeup brand. They are absolutely, totally crushing it online. And Katie is at the helm leading all of the marketing initiatives, and super excited to hear from her and see what we can learn about growing and scaling our own D2C products. I think they're also in Sephora, to be honest. So I'm curious. It's a multi-channel, omni-channel strategy. We're going to check it out. And hey, there's more, Alex. You know what's coming up after that?
Something with Scott Cook. Oh no, damn, I was wrong.
Tell us a little bit about this. What are you excited about hanging out with Farhan again?
How can you not be excited hanging out with Farhan? He talks faster than me, and he's more direct to the point than me. So anyone that can be more brutally honest, I like.
Love it. Okay, and then finally, Alex, let's say you can't wait till next week's Quick Takes. You want more news, you want more analysis, and you want it now. What should you do?
Join our newsletter. Read it on it.
Yes, that's right. Tell us about the newsletter.
Well, we've updated our newsletter. So it comes out 3 times a week, and it's 3 different themes. Monday, it's all about what's going on in the community at TechTO and wider. Wednesday is about careers, not just looking for a job, but maybe how to do career advice. Like we had an article this week on one of our insiders, how they switched from working at PwC to founding their own company. And then on Fridays is our weekly roundup of what's going on. And I think we're going to start a new thing where we're going to feature local angels. So it's stay informed about the community, but also wider tech, what's going on in Canada and tech.
So if you're out there and looking to be featured, come and join the insider community. That's the way to get into the newsletter. Of course, this is where you invest in yourself, a membership program that offers the knowledge, network, and inspiration
Jason,
to help you thrive.
Why haven't you sent me one of those cards yet?
The card is fully imaginary. It is a figment of your imagination, but the network and the knowledge, that is real, Alex. So join for that. All right, we got a couple questions I want to shout out in the chat. First, we've got a couple suggestions for topics, so we should think about these for next week. It's not showing here, but this again, it's Alana Unisov saying, I'd like to hear more about your thoughts on the future of cloud. That would be a good one. I think there's going to be some cloud news coming up, Alex, so we should definitely do that. And then we've got another one here. James is saying the next hot topic joining us from Facebook would be life science robotics. Are there any Canadian companies in this area? Any things that comes to top of your mind here, Alex?
This is a blind spot for me. So James, feel free to reach out to us and tell us something. I know a robotics QSR company I'm looking at, but it's not, and I've looked at life science, but I've not seen life science robotics. So if anyone has ideas, feel free to tweet at us, email us, LinkedIn us, whatever. Just help us out.
Awesome. Yeah, I think that would be great. As you said, we need to cover more life sciences. There's crazy things happening in this country that we need to talk about. Finally, let's just give Joseph here, he's shooting his shot. And I'm pretty sure that this is the month of shooting your shot. So let's give it to him here. Joseph is saying, we're building the Shopify for B2B AI Teams marketplace. Wow. Stuffing all the words in there. And it's for enterprise. Based in Toronto, they won 2 awards from MIT, helped to contribute to the Canadian AI ecosystem. Joseph, you've shot your shot and it's accepted. Come join us in the TechTO Insider Program. We'd love to get you involved. We'd love to help support, learn more, and get you connected with like-minded founders, mentors, and more, and get you scaled up.
I have a bit of feedback here. I'm intrigued by this series of words in this order, but I'm still not sure what it means. Hit me up and explain what you're doing, please.
Why don't you give a little feedback quickly here? What does it make you feel, Alex, when you see this many buzzwords strung together in a row?
I feel like someone went to a website on the website and just put give me a pitch, because again, so not sure what Shopify. Are you helping these AI teams build storefronts for themselves, or is it a marketplace? I'm just curious.
We'll have to find out in the TechTO Insider Group. Good news. Joseph follows up. He says, thank you for that feedback. That's awesome. Folks, what an amazing week in Canada Tech. Incredible. As a reminder, we've got some upcoming interactive live streams that we want you to check out. Tomorrow, Founders in Funding, Teal Book, and Stand Up Ventures are going to be talking about how their deal went down. On February 25th, Marketing Deep Dives. We've got a crossover event. It's retail and marketing, talking about beauty in 2021. And then finally, March 2nd, we got the Intuit Prosperity Accelerator Demo Day. That is going to be unbelievable, including, holy cow, the CEO of Intuit. Huge event, amazing new tech going to be demoed. And if you want to join a community of Canadian tech founders, entrepreneurs, innovators, and funders, you got to check out our membership program, the TechTO.org Insider Program. We'll be heading over there right now to answer some follow-up questions. Joseph, hopefully we'll see you there, learn a little bit more, and we will see you back at Quick Takes next week. Thanks so much for hanging out with us.
We're in the business of delivering impossible things. We're in the business of delivering things that nobody's ever seen before.
If you build that culture, you'll come up with really cool and innovative stuff, and literally could be in the next multi-billion-dollar idea.
So this conversation is largely going to be about scaling yourself and scaling your leadership team.
I want to talk about one of the biggest struggles that I think a lot of startups face early on, which is building initial traction.